Okay, guys, Bruce with Targeted Wealth Creation. Let's jump into GDXY and give you an update after the closing on Friday. All right. It hasn't broke out yet. It had a nice day on Thursday. It's coming back again. You guys know that have listened to these that I'm very, very big going forward on GDXY. I mean, in all honesty, it could be September, as late as probably September before it really breaks out. Um, but I also think it could break out at any point in time. So I'm watching it very closely. I have a position, but it's nowhere near what I plan to be in this because I'm very, very bullish going forward. You know, a lot to do with central banks have been buying gold for 2 years now. The Chinese, the Russians are all buying it. Everybody's trying to figure out, you know, the U.S. has the reserve currency, but we print like crazy. The whole world's been printing, but we end up exporting our inflation to other countries because their currencies are weak. You're looking at the Japanese yen right now. The dollar just is continuing to move up, and the Japanese are going to have to intervene. So these currency wars, while they don't try to put them on, it happens when one nation has a reserve currency and other countries don't. That's why you have the Argentinas and the Venezuelas, and you had Greece have some real issues before it got into the euro. It's just something that happens historically. Um, all right, let me jump into, so my big issue is fiat just continues to go down, and these stores of wealth, these precious metals, besides the industrial use of copper, silver, palladium, all of these specialty minerals that are used in the electric vehicles for the battery. So there's just, and in electronics. So there's a ton of that. And the fact that we're moving to a commodity cycle bull market over the next 8 years and a little bit away from just all the FOMO that's been in the NASDAQ. Not saying that those markets won't do okay, but they'll be outperformed by a commodity oriented. You'll see the S&P 500 reestablish commodities as they make bigger gains than other sectors do, and they simply buy them because they want the S&P 500 to perform. All right, so let's jump in. So we got a 34.55 down to 33.99. So we only went down 1.6. So GDX only went down 1.62. But and I always refer to the Yieldmax because that's what I'm really reporting on, right? I got to report on the underlying and I have to report on the Yieldmax fund. And I own it, so I can't say we. So we only went down 0.58 at 1870. So what did they do? Well, they went out and closed they didn't put any synthetics on. And part of that problem is nobody's buying the fund. Again, this is the most hated sector probably of anywhere. It's like gold and silver and metals and precious metal miners. They haven't done anything. Who'd want to buy that? I'm FOMOing into NVIDIA. I'm buying GME. Yeah, well, it works till it doesn't work, right? And this will have its day and time, and it's already really on a very long basis. I'll show you some charts and spend a few minutes because you got the weekend that you can watch this. So you can fast forward, get what you want at the end, and then if you have time, go back and look at, because I do get people ask me, why? Why are you so bullish on that? That hasn't done anything. Well, just wait, right? Unloved, listen to Warren Buffett on that kind of stuff. He likes to buy value. Well, there's plenty of value here. Okay, so the reason they haven't put any synthetics is they're still sitting on 325,000 shares, which happened on 6/5. So you go over and you look at their synthetic, look at this. We haven't done anything because we haven't had any inflows of money. So Let's look at what they did again on the June tab. So we collected 63,000 because we took all of these off the table and we went out and bought it. I don't like that they put it all in one, and I don't like that they only went 34.5. I mean, basically, we're setting at 33.9, but I think they're doing that looking in the rearview mirror. And, you know, maybe we break out this week and we run up to 36 and then we lose big on the weeklies, but we make on the synthetic. And now there's some FOMO and a feeling that we're beginning to break out. But we very much could just meander and do what we've been doing, which is up one day, down the next, up one day and down the next. I got a chart to show you relative to that. But I wanted you to know that. So the good news is when we're doing this, we're capturing all these weeklies. You know, that piggy bank's getting full. We should definitely have a nice payout. Now, we've had an advantage of 6 or 7 weeks to collect, right? So this will be the first payout come July. But nonetheless, it's been nice with with a IV of 30%. I'm hoping they'll give us this dollar and give us a 70% yield based on the GDXY price, but maybe they won't. But that says something about Yieldmax. I'll call them out if they do that, because the money is there. And I'll go over that in the payout. If they want this fund to be successful, they need to overpay on the yield when they've collected the money. Granted, if they're having to borrow or they're just trying to keep it up to its IV, that's a different take. But if they pay a measly, 1/6 of what they've collected and say, well, it only has an IV of 30%, how are you going to build a fund, right? There's already lack of interest in this area. But only because it hasn't been performing, but what's been isn't always what will be. So there's the 36 cents. This one was in jeopardy, right? Because we went into this with a 34.55 close. Both of them were, but this 29 cents was in jeopardy. They ended up buying it at 15 and we closed at 33.9. And at first I was like, come on, guys. Why didn't you just manage this and let it go to the end? And, they took it off early. But in fairness, it opened around 30. I don't remember, but I looked on the one-day chart, and it was up in the 34s. But then it started moving down, right? It got below 34. And then bounced around, and that's just engineering. When you have a GDX and you have options expirations, so the fact that it closed at 33.99 and with triple witching, there's no other explanation than they wanted those people who had bought 34 calls, right, or sold 34 calls, and puts to suffer from that, right? Depends on which side of whether you're a buyer or a seller and whether there were calls or puts involved. But when you see that kind of a close, it's a good indication they made money by engineering it. They can't engineer it a $4 change, but they can engineer 10 cents pretty easily. Okay, so that's algos. That's triple witching at its best. So what we've got is more money collected. Again, no synthetic. It's all right here. This one was nice. They only paid 3 cents. Where am I, guys? Where is that listed? Oh, sorry, right in front of me. Okay, the 15 cents and the 3 cents. So they bought this one back for 15. Again, if they would have waited, but I'm not going to belittle it, but, had it stayed up, it's okay. So they paid 15 and we only captured 50%, right, of what we wrote. We got 12,000 out of the 25. But on this guy, we pretty much got everything, right? But we only sold this one for 17 cents, right? And we collected 15,000, right, of the 40,000 that I think, let's see, call credit Yeah, sorry, it was 15,000 altogether, and that number doesn't look right. Hang on. Something doesn't look right there. The call credit, 875 times 17 times 100 should be 14, and this should, oh, I see what's happening. This is my gain or loss, duh. So it just added the 12 gain. Sorry, my bad, guys. But I do like to double check this just to make sure something didn't go wrong. And then what they did here is they got a nice, healthy 36 cents. But look where they went. They only went 1.5 out with a full week to go. Again, like I said, this thing can go up and down every day and go nowhere. But it also looks to me like at any time it can run, and it can run based on silver. Silver started to move and then it backed down. So I'm watching it closely. I've got a position, but I'm not going to go in bigger until I see it's breaking out. I'm looking for 35 to 36 over here as a further indication. Okay, let's go look at the weekly. So they wrote one call, right? 1.5% out of the money. Again, maybe based on the previous trajectory, not a big deal. To me, they should have split it, and they should have maybe wrote at 34.50 and the other half at 35. You know, it would have dropped down the amount of money, but it's a little bit of a safety issue. They've collected plenty of money, to be honest. So we're already ahead of the game in the one we wrote on Friday, and that doesn't always happen, right? Sometimes you write one, and then it proceeds to go up, and you've got a negative. I'll show you that in the holding. So we are actually 6.94% of a gain, right? We sold this guy for, what did I say before, 36, and we could buy it back for 33. So that means that we could buy everything back that we sold for 63 at 58. Again, it's got 5 days. So as long as this thing stays below 34.50, we get to keep all our money. You guys are learning that routine from me talking about it. All right. So on our synthetic, when we move back down, we still have a loss, right? So if you look back over the last 4 days, we've been as high as an 800K loss. We dropped to 765. We dropped to 569 when we ran up nicely on Thursday, and then we went back to a 667. But again, that's paper loss, and that's out on 719, right? Not too worried about that right now. Here we are, we closed at 1870, fair value is 1876, so we're 6 cents undervalued. All right, I think we can jump into payout and talk about what matters. All right, so I tried to do a little more work down here, so I had forgotten on a couple of these, I wasn't displaying the days too, right? So just as a reminder, on July, we got July 4th as a holiday, but on the Wednesday of July 3rd, that's when Yieldmax announces the payment, right? Declaration day, pre-market on the 3rd. So we got 11 days to that. We got 16 days. We have to wait till the Monday with the holiday in there till we actually get paid on all of our single stock funds. We're on a different schedule for YMAX, ULTI, and YMAG, which most of you know. But if you're new and you don't know that, Yieldmax breaks the payment schedule for YMAG, YMAX, and ULTI. They're like the second week. And this is kind of the first week, but like sometimes it falls on an 8th or 9th, the payday, even the 10th. So some people could say it's second week for the single stock funds and third week for the multi-stock funds, the LTs and the YMAGs and the YMAXs. All right, so what do we have here? Well, we got a nice situation. This is pretty rare, but again, not a lot of funds, not flowing in, right? This first month, and again, we didn't have the whole month, but we had a fair amount of time. And now we got a full month in June. What was the actual days in May? Yeah, the 20th. Okay. So the very inception day of the fund was the 20th, and then they started doing things really on 21. So I've got that in the payout tab here. And then I tracked June on June. But every single one has got money. So we had $1.07 that was earned primarily on the synthetics. And then 58 cents has been earned this month. Again, Yieldmax a lot of times likes to say, well, we want to pay off this, right? That's the idea of our weeklies. So we've got 84 cents in the weeklies. And that would be a nice payout. But is that all you want to pay out when you've got $1.65 in the fund? So maybe that's what it is. What I'll do on the next one next week is I'll put them both down here. But I'd love to see them get aggressive and pay this thing $1.10, which would be a 70.5, almost 71% annualized yield. So let's see. We're going to collect some more money, right? Now this is one of the last weeklies. We'll be able to write one on the 28th that'll count. And if people buy this fund, they're going to write more in the synthetic. And right now, being under that synthetic, we're going to collect more money. Again, we got a liability there. So, you know, this thing don't take my prediction and run with it, because there's nothing that says they're going to do that. If I wanted to be really accurate, I'd take this 84 cents and say they're very likely to pay 84. If they want to overpay us, they could pay $1.10 and get people to buy in and grow this fund so it'll be successful. Now, if GDX, the underlying, starts to break out sooner, even before this is over, then they may in fact pay that. But a lot of it's going to get driven by just their mentality. It'll still be a 50-plus yield, right? I mean, what happens, I think if I just plug the number in here, what did I say? 84. Let's put 84 in. And so it's a 53.9. And so right now, as I really think about it, that's probably what they do. But we got a chance to collect a little more revenue in another weekly, so we could get that up closer to $1. And then again, it depends. That's all based on this, right? If people start to jump in the fund. So I got mixed views. All right, let me get to one or two charts, and if you want to leave and you're watching, leave, right? Because I'm just going to give you some technical analysis and why and what I see. Here's a little interesting thing that I've tracked. So a lot of people say, well, you know, that's the problem with Yieldmax. You get income, but you really underperform, right? Well, what I did, and I did this for a short period of time, but I extended it up to current. I didn't even bother to do, well, actually I did. I did it since inception. Take it back. So every day I took the close, starting here, 35.45, and 19.10, okay, because it opened at these values, but I had to have a base. And then what did it do from there? Well, this went down 4.01 while we were a fund. Well, we only went down 3.79. So if we go down less, or if they both go up and we go up more, I award the winner whoever did that, right? Whoever outgained the other or lessened the loss. So I give a point. So GDX got one, GDX gets nothing, GDXY gets one. Well, in this case, they went down 1.97 and we went down more. Okay, so I gave the point over here, just following, right? GDX went up 1.47. GDXY went up 1.55, so they got the point. So you just follow it. Here's a case where they went up 2.38, we went up 1.84. They went down 2.5, we went only down 1.5. So I awarded the points and then I totaled the points. So those that say we always underperform, we're capped, we can only go up to 15%, and that's it. You know, we're max, but we have 100% of the downside. Well, here's a case over 21 trading days. 11 said we either went down less or we went up more, and 10 times they got it. So, yeah, it's fairly even, but the whole strategy of saying it isn't, and you're collecting income. Good luck getting income on GDX. I mean, they may do it annually. If I recall, they have an annualized yield, but it's pretty small. So now when those mining stocks get roaring and they have a fantastic year, you may get a 20% yield. But I can tell you, if they're roaring and having a fantastic year, GDXY is going to kick some serious butt. They're gonna do pretty well. So no worries on that. All right, let's go to a couple of charts. Here's another one, and I'm going to leave this. I could show you charts all day of gold breaking out, silver breaking out, how the miners are undervalued. And if you have a particular area you want me to tell you, I will. But this is a hot topic. This is kind of my thesis. And here's an example of a Dow Jones Global News. Buy Aussie gold producers before June quarter reports, market talk. Investors should be buying gold miners before they release their production reports for the June quarter. The recent rally by the gold price should flow through to cash flow instead of being consumed by cost inflation as in previous periods. That should result in a sector-wide re-rate, analyst Michael Scantlebury says in a note. Urias Hartley's is bullish about Romelos Resources predicting a 90 million Australia of cash flow in the June quarter. Again, it just happened to be an Aussie one, right? It's the same. Somebody re-rated, an analyst re-rated Newmont, last month. But honestly, these analysts are basically told by a lot of people, don't go out there, don't bother, right? They're not even doing their job. They should have been reporting 2 quarters ago that these things are going to get explosive. And yeah, some of it gets eaten up by inflation, but every industry, no matter what you're doing, gets eaten up by inflation. The only real 2 things that matter to a mining company are the price of oil, because they use diesel, right? Oil translates into higher diesel, and labor. They got people driving machinery. So I guess you could say repairs on heavy machinery cost more because it's inflation. But like I said, most everybody has an inflation. But what happens when the metals start to move the first quarter or so, they haven't really had a chance to produce much at that, Maybe they're using a lower grade. So when they see it's gone up a lot, they can go even lower on their grades, but they may choose to really make some money and take some high grade and just blow out that earning. But very much you're going to see that. And re-rate means simply, are they an A or a B or a C, or, are they going to beat their earnings based on this? So that's what all that re-rating, it's just looking at it and understanding what they should be given as a consensus ranking, and they expected to beat. Do we see them beating handily, et cetera, et cetera. Okay, guys, that's what I got for you. So either way you look at it, the reason I like this is I understand it. I traded it. I invested in it. I spent 10 years doing this after the dot-com bust, building wealth so that I could retire early. So I understand it. I know what happens. Not that I don't understand other sectors and all that, because you learn a lot when you're doing futures and you're using options. But in this sector, I understand it. So I'm trying to get in early, and I'm watching it like a hawk for every single breakout and momentum to just really be able to pile in. And I'll do other things even outside. I mean, GDX is by far just one of the bigger cap mining indexes. There's an HUI, and then there's 2X funds. When I see it really running, I may go take some capital and buy Nugget, right, which is the same thing as GDX, but it's 2 times the leverage. Doesn't pay, don't look to these for, but again, that's balanced portfolio, saying, well, if the miners are going to run, I'm going to want to get some income on GDXY because I like Yieldmax and I like the passive income. I don't have to do anything. But I'm also going to go put options plays on or create my own synthetics on, an eco. An AEM, which has got a lot of silver and gold, which will just be a massive flyer when this bull market. So there's all kinds of strategies, and I'll share with you guys along the ride some of the things I'm doing. Maybe I'll say, hey, follow me, and here's what I'm doing. And that's up to you. Again, I'm not a financial advisor, and this is not financial advice, but I have a lot of knowledge across that. Okay, guys. That's it. I'm not a financial advisor. This is not financial advice. Have a great weekend. Bye.